Good afternoon, everyone. It's been an engaging morning, full of sessions, lots of knowledge shared, lots of arguments about claims. I thought that was really interesting in the panel session in the morning. And looking forward to this conversation today. So we have Akin Jones. Is he here on the call? He's the CEO of the Ela app, a credit and payment solutions FinTech that has recently started selling a health insurance or offering a health insurance product. And we also have Dr. Babatunde Obraima, who is the CEO of the FinTech Association of Nigeria. Good afternoon, gentlemen. How are you doing today?
Yeah, I'm good. Nice to be here.
Good. Great to be here. Thanks. We're good.
Great. So, Akin, I'm going to start with you. There's an article on Medium from the Ela app talking about how looking at data of the reasons why people borrowed money from your platform, 25% of them stated that the reason was to be able to cover medical bills. And that obviously now translated to you guys offering a health insurance product. So I'd like to start with you telling us a little bit about that and how in the process of developing this offering, you have tried to be inclusive, because even though Nigeria is a country of large numbers, majority of the population is poor and their needs are very diverse. So I'd like to hear a little bit from you about that.
Yeah, thanks. Thanks a lot. I think, it all started just basically by looking at the data. So in 2015, we kicked off as one of the initial digital lenders in the Nigerian market. We proudly like to say we were probably the first digital lender in the Nigerian market. So we took a big risk when no one else would take a risk or venture into that space. We're talking early 2015 when we would go to banks, they would just laugh, like, what are you talking about? Can someone actually give a loan and pay back via their phones? And so we started to see the same trend. So over the year, we've grown to a 1 million user platform. And, we started to see the trends in people who are taking loans on our platform. We give out about 1,000, 1,500 loans a day. And, most of the reasons were for healthcare reasons, so say buying drugs and those that kind of usage. And, it just dawned on us that, if people are taking these micro loans and these mini-sized loans, we're talking anywhere from 5,000 naira to 100,000 naira to pay for medical expenses, then there has to be an opportunity here. We started to plow through the data and we started to ask ourselves, what is the main reason that we are seeing that people aren't getting insurance? And it's, in our opinion, we think it's 4 things. We think it's something I like to call TAPE, trust, access, pricing, and education. There's not enough trust in the market. There's a cultural issue, like we've heard earlier, that Nigerians just don't trust insurance. Be it your class level, a lot of people just don't trust that insurance companies are going to pay back when due. And a good example we'll say is during this whole NSARS protest when things were destroyed. It would have been a good marketing tool, at least for insurance companies, to show how they were covering those damages, because that's part of the type of psychological thought process people have about insurance. The second would be access. How can you distribute this to rural areas? How can you distribute this countrywide? And, for us, the access is we're already giving loans. We're already giving thousands of loans a day. We already have people on our platform. So, why not drive off that platform? Then pricing. Pricing is always going to be sensitive because you're going to lose money before you make money if you want to penetrate insurance really into the rural areas. You can't just think of it like a pure profit, from a pure profit perspective, as most Nigerian organizations would think about this. Because when you're trying to scale a product, you can use any product from Facebook to the digital lenders. You're going to take that hit to get people to acclimatize to that product. And, the last but not the least is education. We have to educate people about insurance, the use of insurance, the benefits of insurance. And, the insurance companies might have to create more creative products in the sense that maybe if those premiums are not used, maybe there are products in which you can get your premium back. And, those are some of the things that got us thinking, and that's why we launched this. And, we've seen pretty good traction so far. It's not been as exciting as we would have expected. Penetration is not as high as I would have personally hoped. But, it's doing well. We started off with 30-day free trials. The question is just, what is the drop-off rate after that 30-day free trial is done? Yeah. Thanks.
When you say the take-up and penetration is not as high as you had expected it to see, is there anything that you're seeing as to the reason why that is? Is it just the year that 2020 has been, or perhaps is it maybe a bit more in terms of education of people not really understanding what insurance, the benefit insurance can provide for them and their families?
I'd say one is trust and two is pricing. I think it just takes time to build trust with people that, that as a reseller of insurance, that people will, buy into this, that you're going to cover everything you say you're going to cover. That, you're saying you're giving 500,000 to 800,000 worth of insurance cover. And, people want to believe that this is true. And on the insurance side too, you have to understand that, they're going to need more people to use this product for it to be worth it for them, because they're not also in the business to lose money. So it's kind of like a chicken and egg thing. On one hand, a lot of people are poor. Like, we did this auto debit where you can put your card in and, we can automatically debit your account every month. And, maybe 2-3 out of 10 people actually have their cards funded or their accounts funded for an expense as small as 2,000 naira. So, or even as small as 500 naira, so when you think about it, a lot of the macros are sometimes the biggest problem. We have some major macroeconomic issues as a country we're facing now. And I feel like as those get better, maybe we'll see a surge in insurance.
Great. Fantastic. Dr. Brima, my next question is for you. You're the CEO of the FinTech Association of Nigeria, and your mission is really about supporting all stakeholders to achieve a thriving and growing fintech industry. So in what ways, is the FinTech Association planning to work with InsurTechs or to support them to encourage, the few that are playing in the space?
Thank you very much. I think for us, we're driven by three objectives. The first one is connect, being able to bring together people within the fintech ecosystem, because we're an ecosystem association. So, we have over 15 different sectors within the association. The second one is to accelerate technological growth. And the third is advocacy, to ensure that there are progressive regulatory reforms to support creativity and innovation within the tech space. So, what we've done, or what we've started doing, is the fact that we've started talking with the regulator, which is NICOM, about the need to have a fintech or an InsurTech roadmap for the insurance sector. And I know that they are doing some things in-house, which they will eventually, bring to the open. But while waiting for regulators, because, the general trend is that technology is always ahead of regulation. So regulators try to do catch-up. So while waiting for them, we have engaged the operators. And what we've done is to work with NIA to start a training on digitization, because it's really important that for InsurTech to be able to be established properly in Nigeria, the operators must understand the dynamics of digitization. So we had that was in September, a training called Digital 101, and we had over 240 insurers attending that. In general, we're having what you call Digital 201, which looks at InsurTech, product development, social marketing, and being able to develop products that are appropriate. I think that one of the biggest challenges, which Akinto had alluded to, is the fact that, we need to deal with the issue of trust. They need to expand the market. So, when I look at insurance, from a buyer's perspective, you've cut off a whole lot of people. And in business, the higher the risk, the higher the premium. Also, I know insurance works on probability. So, if you say that above 65, you are cut off. That's a huge market, really, And so if at that age you want to increase premium for life insurance, for health insurance, but taking them out completely, I think that they need to look at that. I mean, a few years ago, the Harvard Business Review did a publication called "It's Time to Retire Retirement." I mean, and that's because people are living healthier and they're living longer. Even in Nigeria, academicians now retire at 70, judges retire at 70. So we need to look at those dynamics again, and how do we deal with those issues, bringing more people into, because I believe that insurance can actually help to stimulate financial inclusion. I mean, so far, financial inclusion is about wanting people to open accounts. But I think that financial inclusion is about selling benefits to people. I give this example that, look, my parents are 87 and 85. My dad runs his account. My mom doesn't. Her account is dormant and she's not interested in running it. If anybody wants to send money to my mom, she says, send it to me. So I get it, and then I'll find out I'm going to get it across to her. But if you go to her and you probably want to sell her health insurance, she'll probably listen to you, because at that age, they deal with, health issues, but you've cut them off. So, we need to look at that. Let's take agriculture, for example. The average farmer, if you were for financial inclusion, talking to me about insurance for scorpion bites or snake bites might interest him, rather than saying, come and open an account. But in doing that, you get him to open an account. So I think that it's looking at benefits, and insurance can come up with varied products that, can attract, can bring in more people into the space. I think that, so for us as an association, we think that capacity development is critical. So let's start with that's digital literacy with operators, with regulators, and then we can now go to, once the operators and regulators are ready, it's now easier to go to the buyers, to be able to sell to them and then build trust into it. That's a big challenge. But for us as an association, we are, because when we look at it, InsurTech has just less than 3% of the tech operator, in terms of participants in the tech space. So InsurTech is just about 3% of the total tech space. That's small. And when you look at penetration, it's less than 2%. That's a huge space where there's a whole lot of opportunity. So we think that let's start with capacity development, and it's easier to do the rest.
Fantastic. Thank you, Brahma. Well, I'm going to throw that back to Akin. Does your health insurance offering cover people over 60, or are they not allowed to sign up? And if the answer is no, why?
Oh, it does cover people over 60. It's a partnership with IGEA, and the plan we have is it really just depends on what exactly the kind of plan they're signing up, because we have different plans. And actually, we're bringing more partners onto the platform. So the goal is, we're just trying to find more effective plans. It can't just be a youth-focused plan. So it does cover a wide variety of ages. Yeah.
Fantastic. One of the recurring things that keeps coming back from, your comments and the conversations that we had yesterday is the issue of trust, and people not trusting insurance companies and their offerings, and also people not having that level of education and understanding of the value that insurance can provide. From both of you, who do you really think, should be driving educating people about insurance? Is it the responsibility of the regulator? Is it the responsibility of, organizations like yours, Akin, or are we waiting for, international development organizations and nonprofits like the FinTech Association? Who's really going to take on that job to help people understand and educate them?
Hi, my name is Joel Masharia. I'm the co-founder of Motisure, where we provide last mile distribution of microinsurance products. Keep listening to the InsurTech business series to get the latest on insurance and InsurTech within and outside of Africa.
I can take that first. I think for me, we all have a role to play. I think, individual companies definitely have a role to play, but the government still plays a major role. The regulators still have to play a major role. I think, we can see more, the Health Insurance Act that was being debated in the Senate. That was about, but the goal is the government really needs to put a lot more money towards healthcare. I think, having $2 billion, $3 billion towards healthcare for Nigeria, as our total healthcare budget for a country of 200 million people is just too small. I think insurance companies need to be somewhat subsidized. I know there's a national health insurance scheme, but, I think there has to be a more effective plan towards subsidizing insurance. I've heard of schemes in universities. I know Unilag had one and probably still has one now, whereby students, pay a very minute sum for insurance. And I think it just has to be mandated the same way car insurance is mandated. Healthcare is a right. And so we have to find more effective ways to get it to people, and we all have to work together. You can't leave the buck on the government alone, but the government plays a major part, because in a country like Nigeria, where government is everything, and government plays a very key role in everything that happens, them putting that first foot forward and actually driving it, everything from, I guess you could start from primary school and have the students in primary school actually mandate every primary school, every student must be insured. Maybe there's a fee taken out, or is a subsidized insurance plan working with, large scale insurance companies. If we can distribute loans to, millions of people, we're talking right now on the digital lending space, the amount of loans that we push out, there's no reason why we can't get insurance. Of course, if government subsidized and if there's a clear working plan to millions of people. We've seen the telcos at some point play a role whereby, they were offering insurance via phones. Of course, the government and the regulators said you couldn't debit people from their airtime. But these are some of the things that might have to be revisited, because Nigeria as a country should be treated as a startup. I think when our administrators look at this country, the whole country needs to stop treating itself like this big, humongous organization, but has to go back and treat itself like a startup and figure out ways in which it can maneuver and make things happen, but not always in a very structured path. Is my own 2 cents. Yeah.
Fantastic. Thank you. Dr. Brima?
Yes, I think that, one of the ways to deal with the issue of trust is data. So, we need to be able to say, this is data. We have 10,000 people insured. We have 2,000 who made claims and they were paid. So like they say in church, testimony to show that. So if I know that within my community, somebody had a challenge and was paid, it gives me more confidence to do it. So if even for micro insurance, if you do that in the villages, and this guy has a snake bite, he gets hospital treatment free. He has a motorcycle accident, he gets treated free. Because he's insured, it builds trust, and people can say it. So I think that data is important, and they need to create that. I think the insurance needs to be more visible in terms of talking about what they've done. Now about insurance claims and they were paid. So, you need to use that as a way to let people know that fine, there might be maybe this old perception, this is a new perception. There's a need to do that. So I think data and showing evidence of what has been done is critical to be able to build trust.
Fantastic. We've got a few and questions in the chat box that I'm just going to go over before we move on to the next thing. The first is from Otto Obong Idem, and I think this is for you, Dr. Brima, in regards to the digitalization trainings you mentioned. The question is, what does it take to attend such training, or is that only open to, the public sector and the regulators? Are you planning to do that on, a larger scale?
Okay, for now, like I said, we're partnering with, for us, collaboration is critical. So all insurance companies should be with NIA, I guess. And so we partner with NIA, and they do the adverts to all the insurance companies. Now, we for the one we're planning for January, we've had that discussion. I think that some people, there was that question about what if the public wants to attend, and we say we'll probably leave it open. I mean, for the public, so we'd advertise it. If people in the public want to attend, fine, that's good. But that's the way we are running presently. But because it's really important that let's start with the key operators, and then public who might be interested can key in. So, I mean, it's good that that question has come, so I can even let the NIA know that there's a need to not just advertise within the insurance circle, but to make it public so that people who are interested can also be part of it.
Fantastic. Another comment from Abioye Olufemi. She's agreeing with you, Dr. O'Brien, that word of mouth is great advertising for insurance. Witness Godwin says the educating should be done by all. That's agreeing with Akin that it's a job for everyone, but regulators should be at the forefront. And this is a comment from Abimbola Onokomaya, who's the MD of Peak Thrust Insurance Brokers. Educating the public about insurance should be all inclusive, since insurance covers every aspect of life and the economy from the cradle to the grave. So just going back again to talking about the regulators, what would you both like to see, from the regulators? FinTechs and InsurTechs do kind of sort of share a few of the same regulators. Looking forward to 2021, what would you like to see from the regulators that will make your jobs easier?
Hello, this is Pat Callahan, the insurance elephant, calling from near Buffalo, New York, about 5,300 miles from Lagos. I enjoy listening to the InsurTech Business Series without Edamolo Loco, because it proves that even though we are thousands of miles different, the insurance business is not that much different. The concepts and topics that are covered on the InsurTech Business Series, they could be handled the same way right here in Western New York State. So listen in. It's a great podcast, great global and local guests, and it just proves it's a small world for insurance.
I would say, just jumping in, I'd say something around sandboxes. And I know this has been done more in the FinTech space. I don't know how much it's been done in the InsurTech space. I think sandboxes, hackathons, I think more meetings. I think associations like the FinTech Association of Nigeria are very good. I think they act as a forefront to the regulators, and I think they act as a middleman to the regulators. So, those associations are very much welcome and are very much good. But, more sandboxes, more hackathons. I think it's very hard to get the college students or the university students who are building these very revolutionary products to meet regulators. Like, where would a 18-year-old boy who's in university working on some great products with friends, and they have this great idea, where's that pathway for them to actually launch their product without huge capital and the huge capital constraints that exist? I remember when we were starting, I remember how tough it was to come up with the capital. I remember what we had, how difficult that was. So how do we, build that system that, our youth that are building these very interesting products have somewhere they can go. They can be on the NICOM site, like, hey, are you a startup building an InsurTech product? This is the process. This is what you have to do. This is a step by step. You have to register here. You have to do this. You have to do this. So it kind of, and you also don't want the illegalities. You don't want the, anyone fraudulent trying to get into the industry to do something that they're not supposed to be doing. But you also don't want to leave out the people who are innovating, but just because of capital constraints can't get their innovation out to the world. So that balance will come from people like the FinTech Association of Nigeria, will come from the regulators, and, will come from hosting more events that bring everything together, I think, is my opinion.
Thank you.
Okay, I quite agree with Akin. There's a need to have more hackathons. But see, hackathons will be a function of defining what the pain points are, so people actually, are working towards providing solutions to the pain points that have been identified. I also quite agree with the issue of having sandboxes. Because when you look at even within the financial system, the cheapest license to get from CBN today is 50 million naira. So where does a fresh graduate get that from? So that's a huge challenge in terms of the licensing issues, which we keep discussing with the regulators. They need to look at different regimes for licensing. I also think that, younger people need to also look at how they can collaborate or partner. That's a big challenge we also have in this environment. We all don't like partnerships. Everybody likes silos because it's mine, so we need to deal with that mindset also. I think the partnerships that will work. I always say that 1% of what is doing very well is better than what 100% of what's not doing well. So, you need to look at where can I get partnerships that will work for me and I'll still be good. So I think that the regulators, are responding. What I would like to see from NICOM is that whatever they are doing in terms of the tech space should be inclusive. They should bring everybody, which is what, for us, we work with all the regulators. Like, for example, SEC will set up a committee, bring operators, bring regulators, bring all stakeholders, and we can come up with a roadmap. I think that I would like them to use that same kind of approach. So it's stakeholder participation rather than regulator saying, this is what we want you to do. So, but I think that there's a lot of opportunities. We can always it will keep getting better. Like you say, we're a startup country, so we'll make the mistakes, but then we'll keep improving on them. The good thing is that even the government realizes the need for that technology is what's going to drive the future, and they need to, start putting structures in place to be able to achieve that.
Fantastic. Thank you, Dr. Brima. I can just see Rob, who's joined the call. Thank you for joining us. Rob is the author of a book called The End of Insurance as We Know It, and the most interesting man in insurance. We've just been having a conversation about FinTechs and InsurTechs and how they can partner together for more inclusive insurance. A question to all. I find that when we talk about inclusive insurance, in Nigeria and in this part of the world, we tend to talk about microinsurance or health insurance specifically. So I don't know, Akin, are you planning to develop any other types of insurance, or is health just the lowest hanging fruit that, is useful to majority of people in this market?
No, we're looking at, partnering with other insurance companies to roll out other products. We're partnering with more companies on the health side. We're partnering on the automobile side, on the equipment side. There's a lot of needs on the insurance side. I think it's just a step-by-step process. I feel like health, we launched during a time of COVID. Health was a very pertinent need. Health insurance, for lack of a better word, has better margins if well executed. And so there's a lot of reasons why, we decided to kick off with health. There's much more of a need for that too. You always go where the need is. But, our platform is going to be, a wide array of insurance products that are going to launch soon. I think the key for us is how do we use artificial intelligence and the data we already have to be able to be smarter about insurance, be able to recommend insurance products to people who are paying bills on our platform or getting loans on our platform, so that we can really get insurance to fit for each person who's looking for one.
Fantastic. There's a question here that's come up in the chat box that's for you, and it's from Otto Obong Idem, and he says, what makes the Ella app insurance offering different from buying directly from Hygieia, and why should people buy from your platform instead if it's a partnership with Hygieia?
I think it's a great question. I think for us, it's the experience. We want you to come in, more flexible plans. We allow you to buy monthly. There's more perks, more giveaways, more, just a more user-friendly approach, which, the average insurance company will see as crazy or as stupid, trying to build that customer loyalty on a one-to-one basis with the user. And then there's also a bevy of other products you can get from us. So it's really just the customer-centric experience that we're building. And, as time goes on, we'll be able to offer more customized products. Hygeia as a partner has been a good one so far. And, we have other partners coming on board. And, we'll be able to offer more flexible products and more people-specific products, because the Hygeia product is specific for a particular type of customer, but for others, it just might not work. So, we're building other products that fit each customer's purview. And that's the customer-centric experience is where we offer value.
Fantastic. Thank you. Right. So my next question is for Rob. When we talk about inclusive insurance, it's not just about partnerships and working with the regulators and fintechs. It's also about the people that work in the industry. And in one of the chapters in your book, you really talk a lot about, the future workforce of the insurance industry and how things like technology are changing that. You've had a 25-year career working in insurance, and you've written this book now. So I guess just to wrap up, I'd like you to talk a little bit about, how we can make the workforce more inclusive and the skills that, people really need to develop, and insurance companies and InsurTechs need to look out for or train up in the people that they already employ.
It's a fantastic question. You heard earlier, right, talk about artificial intelligence, and we're going through a complete revolution, really, in insurance. It's a very old industry, but in some ways, it's still very young and very immature, and has a lot of opportunity to grow and to meet the full needs of everybody, not just in a couple of segments. And technology is going to lead the way. So we already are seeing that in some instances, and we're going to continue to see that over the next decade and beyond. That's something that was really striking to me as a career professional over the past 25 years, and really in the last 5, seeing what technology was going to do for our industry for the next 25 years, which I don't think will look anything like my first 25 years in the industry. But at the end of the day, this is still about humans, and it's still about needs, and it's about empathy. Risk has not changed. In fact, if anything, it's gotten more risky. We have more exposure. We have more things that we need to be protected from, and we can't always rely on technology, nor will we want to, right? We want humans to be there in our time of need. So it's really about having technology be there when we want it to be there, certainly during the purchasing process, to manage policies, et cetera. But then we want humans to be there during the claims process. They don't have to be there throughout. I think technology can help, but it's really the companies that understand when do we want a machine and when do we want a human. And I also think that young people are really critical to making us successful. People today that are entering the industry, they're digital natives, right? They have been using this advanced technology throughout their entire lives, and they're accustomed to the pace of technological change, where somebody like myself, I try to keep up, I try to learn it, but it's harder. And so I think just those traditions of, the elders, the most senior people, right, should be running the company or making decisions. I don't think it should always be that way. We need to make sure that we're hearing an array of voices from people with different backgrounds, different experiences, and really bringing that to bear to serve everybody's needs. So it can't just be that, the most senior people make all the decisions, because they aren't necessarily in the best position to make sure that the company is moving forward to meet tomorrow's needs.
Fantastic. Thank you, Rob. We've got just a few more minutes to wrap up. So I think I'm just going to go back to the beginning from you, Akin, just your final thoughts on how we can work together, FinTechs and InsurTechs, to provide more inclusive solutions for all.
I feel like it's all about sacrifice. I feel like insurance companies have some governance structures that might make it very difficult for them to effectively partner with technology companies. And I feel like those companies have to go back internally and rethink how they operate and rethink what thesis or what ethos they believe their partnerships should be about. And, like, what kind of sacrifices do we want to make? Are we willing to share? Or do we feel like, oh, we can do it all in-house? Is it not just to hire some engineers to come in and build it for us? Tech is about iteration. It's about being able to look at the product and continuously iterate. Since when we launched our product in roughly April, May, we've iterated at least 3 to 4 times, and there's one more iteration coming. And this is all about learning from our users versus a very big corporate governance structure that might take 10 layers of approvals to get things through. So are you going to be able to build little silos within your organizations that are going to foster creativity and foster partnerships? I think that's the question I'm throwing to the insurance companies. And for us tech companies, are we going to be able to boost up our risk management processes, be able to put the capital, raise the right amount of capital to also share this risk with the insurance companies? If we can do that, the sky is the limit for this market, this sector. The opportunity is endless. 3% on 200 million. Insurance is where you need to be right now, be it FinTech, be wherever. So we're excited.
Thank you, Akin. We just got a comment agreeing with your point that the management structure of underwriting firms will make it a bit challenging to holistically partner full-time with technology companies. So, Dr. Obrima, your final thoughts, and then Rob, your thoughts as well.
Well, there's no doubt that collaboration is key. For us as association, we'll keep looking at how we can create that nexus for collaboration between the insurance players, regulators, and the markets. Like I said, capacity development is critical, and that's what we'll focus on to start with, and we'll keep doing that.
Thank you.
From my perspective, I would say it's really about building trust. We kind of talked about that as a group a little bit yesterday as we got together, and that seemed to be a common theme. So how can we build trust? How can we grow the insurance ecosystem? How can we make it a more mature market and do it in ways that consumers trust the insurance industry? Folks have in the past really relied on themselves and each other for savings. They would have saved money. People talk about putting money under the mattress or putting it in the piggy bank or a rainy day fund. And these are the types of risks that we want to provide insurance for, so that money doesn't have to be stuffed under the mattress, so that it can be used to purchase new things, to make investments for a household or for a business. And that actually helps grow the economy at large. So there's some strong reasons, society-wise and even from the government, that they should encourage the growth of the insurance sector. It definitely helps modernize economies. And I think with the technologies that we have, with the brain power that we have, as you've seen on this call and elsewhere at the conference today, we can certainly make this happen. And then I think the other exciting thing is that you don't have to be tied down by the way that folks in the United States, where I live, in the UK and others have always done it either, because those can come with legacy systems, those can come with other burdens. And so you have an ability to start from a different place and to rethink things going forward, leveraging the technology that we have today. So I agree that it's a very exciting time, and I look forward to the innovation that comes over the next decade.